Here's what everyday investors need to know. Oil prices have been on the move recently, haven't they? Up over $100 a barrel, back down, then up and down again and again. And every time oil prices are on the move like this, the same question crops up. Should I invest in oil or should I wait it out? Hello, I'm Brian, and today with MoneyFarm, I'm going to take a closer look at oil and how it works as an investment, so you can decide if investing in oil is something you want to do or not. Okay, let's start by talking about oil price volatility, because to state the obvious, oil prices have been volatile in 2026. So I don't need to do much to reinforce the point that oil is one of the most sensitive and reactive assets. Oil prices can move quickly and sharply based on what's going on in the world, whether that's supply shocks from the conflicts involving Iran or Ukraine, decisions by OPEC, or sudden changes in the global economy. Strong demand can push prices up, but on the flip side, if demand falls, prices can plunge. Aside from the recent conflict in Iran and challenges in the Strait of Hormuz, we've seen this numerous times over the past few decades. There was the OPEC oil embargo in the 1970s that saw crude oil prices quadrupling, which led to a global energy crisis. And then at the time of the global financial crisis in 2008, oil crashed to around $30 a barrel from all-time highs of around $150 a barrel. And of course, there's what happened during the COVID pandemic, when planes were grounded and countries shut down. Then oil demand collapsed almost overnight. And at one point, US oil futures actually went negative for a bit because demand had dropped so dramatically that there was nowhere left to store oil. So traders were literally paying to shift it. That's how sensitive the market is. Prices can swing dramatically, and they can do this very quickly, and I mean really quickly, like in a matter of hours. And this is exactly why oil is challenging for investors, even extremely experienced professional investors, because by the time you're reacting to a headline, the market has already moved. But if you're investing for the long term, rather than trying to make money from short-term price movements and all the current noise, these headlines, the spikes and the drops, should they really be driving your decision? Instead of thinking about what oil is going to do next, perhaps it's a question of whether it deserves a place in your carefully built, diversified portfolio, the portfolio that's designed to help you build wealth steadily over the long term. And if that's the case, then we need to look at things from a different perspective, because over time, it isn't day-to-day headlines that drive returns. Instead, it's a number of bigger, long-term forces that play out over years. For example, things like global demand for energy, how much supply producers choose to bring to market, and the long transition towards renewables. So, does oil deserve a place in portfolios? Well, we don't really need reminding right now that oil plays a huge part in the global economy, and in spite of the energy transition, this is unlikely to change anytime soon. Oil is needed for transport, to keep supply chains moving, to heat homes and power businesses, and to make everyday products. And all this demand means oil companies can generate substantial profits and also pay chunky dividends to investors. Oil can also behave differently to other parts of the market, not moving in sync. For example, it can hold up and even rise when other parts are struggling, which is why some investors use oil as a way to diversify rather than a route to quick gains. On the other hand, oil also poses some risks and uncertainties. And now I'm talking about the transition to renewables, new technologies that affect how we produce and use energy, and changes in policy and regulation, all things that could have an impact on demand, profitability, and how oil companies operate. And then of course there's volatility, which I've already talked about, and geopolitical risk. Regarding geopolitics, the oil industry, as we've seen so clearly in recent times, is tied up with governments, national interests, and global relations. So decisions made by governments or groups like OPEC can change things. None of this is predictable. And ultimately, you also have concentration risk, because if you're investing in oil companies or a fund that focuses on the sector, that represents a more concentrated position than spreading your investments more broadly, which means that if oil's not doing well, it'll have a bigger impact on your portfolio. So that's the opportunities and the risks associated with investing in oil. The next question is, how do you actually invest in oil? So So, how do you actually invest in oil? Well, for most people, it's a case of investing in oil companies, those big listed energy names like BP, Shell, ExxonMobil, and Total Energies. And this can be done by buying individual shares or gaining exposure via a fund, whether that's an ETF, index fund, or an actively managed mutual fund. There are other ways to invest in oil too, for example, through futures contracts, where instead of buying shares in a company, you're essentially making an agreement to buy or sell oil at a set price at a future date. You're betting directly on where the oil price will go, rather than how a company performs. These are significantly more complex and tend to be for more sophisticated and often institutional traders. So for most people, oil company shares or funds are the more straightforward route, which leads neatly onto the next point. If you're already invested in a global fund or a fund that tracks something like the FTSE 100 or S&P 500, then in all likelihood, you're already investing in oil because those big energy companies tend to occupy spots in the major indices. So even if you've never intentionally set out to invest in oil, take a look at your portfolio because you may well find some oil there already. And if that's the case, then rather than should I invest in oil in 2026, perhaps the question should be, do I want more exposure to oil than I've already got? And that's a very different question because it's about changing the makeup of your portfolio so it's tilted more towards a specific sector. So where does all this leave us? Well, like many things in investing or life in general, there isn't a simple yes or no answer to whether you should invest in oil or not. For some investors, oil is important. It provides exposure to a sector that can generate cash and to investments that can perform differently. But that comes with trade-offs, the volatility, long-term trends, and so on. So if you're thinking about investing in oil, perhaps pause for a moment and ask yourself these questions to see how it fits with your approach to investing. Do you understand oil as an investment and why it can be so volatile? Are you comfortable with the fact that prices can swing sharply and sometimes in a very short space of time? How does it sit alongside the rest of your portfolio, particularly if you've already got ETFs, index, or other broad funds? Is this a long-term decision rather than a reaction to all the news about oil? Does it fit with your wider goals and the level of risk you're comfortable taking? And if you're really keen on investing in oil, are you making sure to allocate just a reasonable percentage of your overall investments? Because if there's one thing oil shows us, it's how quickly markets can move and how easy it is to get caught up in the headlines, even though we know the picture could look completely different in a few weeks or months down the line. And if you're investing for the long term, remember this: your returns are far more likely to come from staying invested, staying diversified, and sticking to your plan, not from trying to guess where oil prices are going next. So there you have it, your quick guide to investing in oil in 2026. And if you found this helpful, please subscribe and check the description below for more on MoneyFarm and how to start investing today. And as always, I look forward to seeing you in the next video. Bye bye for now.